fantastic, very expert and coincidentally all-female panel here, which is a nice rarity for, I think, both the tech and the property industries. I did toy with trying to kind of balance it out, at least in terms of gender, but then thought, actually, given that the real estate industry is 17% female and the tech industry is something around 22, until we get to gender parity across the business, I think we can afford to have an all-female panel today. But we'll try and do better in other forms of diversity next time. Joining me are some brilliant build-to-rent experts who have got some real tangible expertise to share with you. So please do engage with us on Slido, because that's the best way for us to get your questions addressed. To my right, I have Chiara Zuccon, who is the head of PRS at NatWest RBS. To her right is Olivia Harris, Chief Executive at Dolphin Living, and Emma Long, Head of Corporate Strategy at Legal & General IM Real Assets. Rivaling who's got the longest job title. Yes. Juggle around that. So first of all, build to rent. What is it? That in itself is an innovation in quite a staid residential sector. It's kind of a new asset class emerging within the wider PRS, the private rented sector. They're not the same thing, as we'll get into, but build to rent is about this sort of specific product within a wider PRS. We want to talk about the innovations in that, but not just launch into a list of tech, a list of kit that we can buy, because I think many of you in the room will be there working in that space, know all of that already intimately and probably more than we do. Where I thought we could start was talking more around innovations both in financing of build-to-rent, innovations in the delivery and the operations, and then overlaying on that some of the questions around tech that really we want to get into in some detail. So really to start with that, Chiara, if I could come to you, what makes build-to-rent and PRS kind of a different prospect for lenders?
So build-to-rent has brought up a lot of questions for lenders on how do we approach a sector that is we know intimately, both on the investment side and the development side. But build-to-rent combines the two in completely new ways. And whilst this now, we say build-to-rent has been going for 2 or 3 years, it still is in infancy and is emerging in different directions. So we are seeing different models of build-to-rent, both in the type of buildings that they are being delivered, the type of service that is being delivered to the tenant, the type of amenities. We're seeing the planning regime changing all the time and being different in different geographies. We're seeing completely new use classes being launched and being linked to build-to-rent, including co-living, for example. But we are seeing an innovation in build-to-rent is bringing to the wider commercial real estate world, including the emergence of more and the coexistence of different use classes in the same scheme or same assets, including retail, hotels, student, PRS, build for sale, coming forward all at the same time. And with that, there's been really different models both on investing and lending to the sector. But for me, build-to-rent encapsulates a real shift that we are seeing across the commercial real estate, from relying on an income that is linked to an occupier for 10, 15 years to more of an more on a consumer an operational aspect of the asset. So what is the asset going to bring in terms of value to that consumer that is beyond the physical presence? So how do we go as lenders and valuers and investors? How do we put the value to that asset? Is very different to traditional real estate.
And that's a really key thing. So many people say, what is the build-to-rent model? But that there is no single model. And Olivia, in terms of that, what you do at Dolphin is quite unusual. Perhaps you could kind of outline the model that you have specific to build-to-rent and some of the changes that you're seeing.
So for those of you that don't know, Dolphin Living are an affordable build-to-rent provider located in inner London predominantly. We completed our first purpose-built build-to-rent property in 2013. Unlike most build-to-rent providers, we are trying to maximise the number of sub-market rental homes that we operate. We've got just over 600 homes that we own and are let, and we've got a pipeline at the moment. We're keeping abreast of the ever-changing, particularly the planning that you mentioned earlier, and trying to work out how we can deliver our product within the sort of the legal constraints. There's one particular model that, as a charity, we're relatively well known for within the charity sector and the affordable housing sector, and that's a personalised rent. So we look at not just household income, but household composition in trying to work out what rent a household can afford to pay, so that we're not charging a rent that creates household rental poverty, which is something that's been quite widely written around in housing media.
Brilliant, thank you. And then Emma, coming to you, and we'll circle back on some of these bigger questions. Emma, for L&G really being one of the pioneers coming into the build-to-rent space, it was seen as quite unusual that you chose to actually go out and take the development and the construction risk of acquiring sites and developing your own purpose-built stock, as opposed to doing what a lot of others were doing, which is trying to sort of acquire and retrofit existing. So could you outline how you came to that strategic decision?
Yeah, sure, of course. So for us, I think we, as a landlord of our scale, we're one of the top 5 UK landlords. We've got about 20 billion in terms of real estate under management across commercial and residential. When we were thinking about residential and how we wanted to move into that sector, it was much like commercial. We wanted to come back to what does the customer and the occupier or your resident experience, because, and I think we'll go on to talk about that in much more detail, but that's fundamental to the proposition. So we didn't want to put out a product that we think people want to have a choice about rental. They don't want to have to rent because that's all they can afford to do. They want to choose to do it because they get a lifestyle choice out of it. So when we were looking around the market, settling on this kind of concept, there wasn't really anything out there that we thought we wanted to buy that really worked for long-term rental, that really thought about the way people are going to live in those buildings and experience them, and what's their emotional connection to their homes. So we looked at that and thought, we're going to have to build them. And we were in a position where we had capital on our balance sheet that was able to take that kind of early stage development risk. And now we're looking at how we've got a portfolio, 8 schemes under construction. Our first one's up in Salford that's let and stabilised and full of residents who seem to be really enjoying it, so that's really positive for us. But yeah, that's absolutely why we thought we have to build these things, because also we want to be the long-term owners. We want to be a landlord that you can rely on, providing you security of tenure. It's your home. We want you to feel like it is your home. So we're going to be around for decades. And in order to future-proof our buildings, we need to actually really, really focus on the way they're constructed, and they've got to be really specific for that rental market, because actually the value that delivers over the long term is much more important to us than buying, building, flipping out, over a 5-year cycle, for example.
And so a lot of those points are a challenge to the traditional model of property. For people who don't work in UK property, a lot of this is kind of common sense, actually. But when we come from an industry that I never really used to hear the word customer, client for the people who owned the buildings, but it was occupiers, and occupiers or end users were generally pretty far from any conversations. I mean, less so in the affordable space. To be fair, I think the affordable space has always had to be much more end user focused. But there has been this real transformation where you see, the London office market, where you could make a career selling 20-year leases. You now have 40% of that London office market last year was WeWork. So there's all that disruption, and that customer focus is coming through, I think, in much more tangible ways. And you're seeing that in the kind of how you look at value. Chiara, we had a little chat about that earlier.
Yeah, absolutely. I think the value in a build-to-rent asset is not longer just what the rent is achievable from letting out the flat. It's about attracting in the first place the tenants and then retaining them, and that will be through the interaction and the experience of the tenant as with that building. And the value that the tenant put on the experience is not anymore just price. It's things like ease, convenience, efficiency, security, control, transparency, fairness. And it's kind of these kind of things were not there in the property industry before. So it's, like Emma was saying, is making sure the landlord is aware of the end users and what they expect to see when they come and look at that building. But that said, it's very hard for lenders and valuers and investors to put a value on that experience. For me, the conundrum between experience and need is not just the need to rent, it's about the experience that is going to be generated in renting that apartment, and how do we value that. And it's really hard to value that when the building doesn't even exist and we need to build it in the first place. And when there aren't that many other comparable buildings. So we are in very early stages of the build-to-rent sector. But the more we build, the more the consumer become aware of what build-to-rent is and what it can offer, the more I think we'll be able to apply more value to the experience rather than just a need.
And there's a few questions coming in we'll come to in a second.
Yeah.
But have you got thoughts on that value point? And particularly in the affordable end of the spectrum, where there's an assumption that value is just you're lucky to have a space at all. And actually that's not necessarily true. There are tenant requirements that are really quite demanding.
Yeah, so within our build-to-rent scheme, we have some market rent, and we focus on making our developments tenure blind. We don't think that just because people can't afford to pay such a high rent that they should, not have the same quality of fit out. Really looking at valuation from a borrower's perspective, when we borrow money, there are 3 different valuation methodologies that are used. Whether it's the sort of traditional social housing valuation, whether it's the market valuation or the one in between. And really those are used because no one has settled on a model because it's quite, it is a new sector. And also for us providing sub-market rents, we have a very, very stable tenant base. Not just because of this thing about people thinking they're lucky to have that flat, but actually there's very little alternative product in the market. You talked about stabilisation. And one of the things we've had to do is say we don't really have a stabilisation period. It's really how quickly we can move households in. We have a waiting list. Yeah. So we sit within the sector, but we are slightly different in our model of how we value what we provide.
But in that, you're able to perhaps pioneer some tech-type solutions in the kind of things you're exploring, whether that's some of the kind of maintenance reporting, moving that online, or those kind of things. You're able to do that with your kind of stable tenant base. Yeah,
and I mean, for example, in the design, some of our earlier buildings, we follow the hotel type design, so you can access the utilities from outside the flat. We don't have to go into people's flat because our tenants are working, and they don't often have the flexibility to be able to be there during the day. And you have more and more households where both members of the household, if there are two are working. So it's about trying to adapt that. We recently did a customer survey, and what our customers want is they want to speak to one person to deal with their repair, but they want that person available 24/7. So there's trying to find a compromise between that and adapt what we offer to how households live, and as sort of generation rent and the way people work and live changes.
Absolutely. So we'll come to these questions in a second, ladies, if you want to have a quick look at them. But Emma, in terms of how you're assessing when you're looking at doing a new scheme, there's so much great tech and gadgetry out there, whether it's kind of online reporting methodologies, drone landing pads for delivery, and amazing kind of artistic cycle units that you can kind of do crazy things with. A lot of it, the build to rent sort of difference to PRS is around this community idea that you're trying to build, getting away from the loneliness, and the fact that we've appointed a minister for loneliness in the UK and actually recently in the US as well highlights this. So how are you, from a kind of bare bones, trying to put value on each of those? How do you try and assess what's going to be the kind of the iPhone versus the mini disc? What's going to work and what isn't? Because we don't have a crystal ball when we're making those decisions.
Absolutely not. And it's a really quickly evolving sector, and we were talking about this earlier, but there's going to be some winners, there's going to be some losers, and we have to look at our schemes and think, what do we want to plug in right now, and where might we go in future that people can't live without, and is anything we're doing now stopping that, basically? I mean, the way people have lived in their homes hasn't fundamentally changed for hundreds of years, So while there might be some fantastic gadgets and tech out there that we think that everybody can't live without, do we? I mean, there's certain things that just aren't going to get taken up in the same way. So I think it's really about, for us, it's because we're building the space, we can just think about being more flexible around things like building in a bit more room for cabling and utilities, because things like that might change. So it's being able to make those changes without great cost of ripping things out and retrofit. So it is about future-proofing, and because we don't know what these things might be. But to kind of actually to come back to Olivia's example about the hotel industry, the things that we think actually will really set our schemes apart are actually probably not the tech in the way that we might think about it on first value, because it's going to be really about the people, the community feel, and actually one of the things we think is going to, our schemes are going to live and die by are things like front of house. Who is the person that greets you, that can, hasn't seen you for a week and can say, is everything okay? Or, have your repairs been, all taken care of? It's that human bit, actually, that people are going to really respond to. So we have a residence portal at our scheme in Manchester. And we thought that people would, log all their repairs through it, because it's, that's a much easier thing to do, and people don't want to interact about that kind of activity. No one's logged any repair through that portal, but what they have done is organise going out for drinks with, the other residents. So it's actually created a community forum, because that's how people in the building are speaking to each other.
So the best tech solution isn't necessarily the one that's adopted, actually, in the way that it was intended.
The tech has allowed the people working in our buildings and being the face of our building to be the face of our building and not get caught up in the admin of logging repairs. It has allowed them to be the face and the identity and the community of that building. So yes, tech is very important in the operation in the back of house, but actually the way that the residents interact with the schemes is very human.
Okay. So there have been a few questions I've seen popping up along the lines of defining build-to-rent versus PRS and understanding, and a couple of questions asking whether the general public are aware of that, which I think the obvious answer is probably no. But just to clarify in terms of where I think the bulk of the industry is sort of settling on definitions, and ladies correct me if you think otherwise, and I am slightly biased because we set some of these in some work I did in ULI, but they've been adopted by the GLA and by the government, so I think we can be fairly confident that they go with it. The private rented sector is the term that's been used in the English Housing Survey for decades, and essentially means anything rented, whether that's kind of the flat that you rent out, or social housing is considered as a separate category, but it's anything rented at whatever scale by whichever landlord, the good, the bad, and the ugly, essentially. Build to rent is a clunky term, it's far from perfect, but it's about trying to talk about institutionalized rent, something that's professionally designed, purpose-built for renting in perpetuity, to be owned by one landlord, again, in perpetuity. So not a scheme that could be broken up, divided, and have lots of different landlords in a scheme where you then can't agree on how repairs are done or how the common areas are fitted out. Now that, as an industry in the US, it's known as multifamily, and it's much more common in the US. It's a kind of $160 billion industry, actually, and that kind of institutional, large-scale renting is really, really popular with investors because it provides a nice, stable, kind of diversified income. But it's also being adopted very much here as a way of renting that can be desirable. So for some people, it can be a choice, and for others, where it is a need, it can be a less than terrible experience. And I think for anyone who, like me, has rented in the kind of general rental market in London, it can be pretty horrible. So actually, a lot of the cultural stuff around build to rent being defined as something other is about trying to help the general public have a better experience of renting and be able to, whether they're choosing to rent or they have to rent, but it can be a better experience. I think that's where a lot of this focus is. There's a question there around the kind of lower income households that I think you've probably touched on, Olivia. Yeah. But the idea, I think when build to rent first started happening in the UK, everyone assumed it would only be London, it would only be kind of high-end penthouse kind of development. And you're doing a lot of your own, but you've got colleagues and partners in the industry who are doing it at all sorts of levels.
And I mean, the planning requirements now are that you have to have sub-market rental housing within a build-to-rent scheme. Yeah. There is huge amounts of demand for it, as I'm sure we all know, and we read regularly in Evening Standard and a lot of other publications. Is it sustainable? It is possible. It is really difficult to get the numbers work, but you can make the numbers work. And at Dolphin Living, one of the ways we make it work is we charge slightly higher rents than traditional social housing rents, and that means that we can provide more sub-market rental within a build-to-rent development than might have traditionally been able to do so. And we're doing some work at persuading local authorities that that is what they want to do, because that maximises the amount of sub-market rental housing that's within a scheme.
And Chiara, there's a question there from Ted about, do you think the long-term interest of investors will create a higher standard of construction and built environment? I know you're involved in looking at things like modular construction, which has been really popular in built environment. Do you think that is going to happen?
Yeah, completely. I mean, I already see a lot of investors coming in with a 30-year and business plan. Whilst I'm involved in the development and stabilization, the whole discussion is around the quality of the building, the future proofing of the building, because we don't know what's going to be next. But having that institutional interest behind is going intuitively means that they've got a interest of retaining the tenant, looking after the income, looking after the building, that perhaps it might not be there in traditional PRS when there is fragmented ownership and short-term it is.
Yeah. And it doesn't necessarily have that on-site management that you guys were talking about either.
And it differs from the build-to-sell model in that as well, because you're going to own it for a long time. You're interested in the way that it's designed. First of all, that it has the adaptability that you talk about, but that what you're building is not going to have high maintenance costs, or that you're working to minimise or be able to manage those maintenance costs long term.
Yeah, being able to look over that, 30, 40, 50-year time period that we can do as an institution like L&G, you might spend more upfront, but then you're thinking, okay, am I going to have to replace this 20 times in 50 years, or am I going to have to replace this twice? And you can make those kind of cost-benefit decisions because you're that long-term time frame. The build-to-sell, where you've got house builders spinning the house on 2 years, and we've seen issues around the quality of construction in new builds. What we're really trying to provide here with people is a genuine service for what they're paying for. Think about how much of your income goes out onto where you live, and from the kind of PRS traditional kind of cottage industry of landlords having 1 or 2 buildings, you don't get much for service for that, and that's really what we want to be able to offer people.
And for us as a landlord, having a property that we can't rent because we're repairing it is really, really expensive.
Yeah,
so it's not totally altruistic. The minimum, we can minimise the cost and the timing it takes to do repairs, then we're maximising our income.
Absolutely. And there was a question I think we were touching on there about, is it really that different to a build-to-sell scheme? To which I will say absolutely yes. And the example that I always give is if you are designing a for sale or a private rental scheme where you've got lots of different landlords, you're very much focused on the gross to net of that building and getting your build cost down. You're going to take out things like recycling sheets because they're expensive and complicated to fit and a bit fiddly. And frankly, once you've developed the building and gone, you don't really care about the end user experience. Actually, if you're the long-term owner and operator of that building and you find that after a year of stabilisation that your residents are dragging their bins down the corridor and into the lifts and everything smells, you've had to pay to replace the carpets 6 times a year, which you didn't have in your budget, and you're struggling to let new flats because people don't like the smell, then you will wish that you had fitted those recycling sheets. And that is the kind of operational decision that you need at the beginning that is very, very different if you're thinking of a building for long-term rent as opposed to for sale. Are there other examples you want to chuck in, ladies? I know you've seen some when you're trying to assess them.
Yeah, I mean, there are different models. I think with a distinction I would like to build on that definition is that build to rent is not just one model fits all. So whilst, the multifamily flatted kind of development is quite common, there are different models that are coming forward in the regions, for example, where we are seeing housing developments used for PRS. But even in that case, yes, they are just houses and you could sell them, but perhaps there is a bit of a community centre, or there is a site manager, or there is someone that goes around and does the loan, and they always look like part of one community. Or we are seeing smaller schemes that are, hub and satellite. You have smaller schemes and then they got amenities in one place, but it's always with the idea of creating that feel of a community and having a landlord looking after the whole community.
That on-site management is really key in creating that place.
Yes. I think also where there's a bit of an interesting tech angle for us is thinking about the widest kind of appeal for our sites in terms of that resident. So they might be young professionals, they might be families, or they might be people that are later on in life. And are there things we can think about that allows you to live in the same building or the same location throughout your life journey, or if you are at a different stage in your life. So that might be things around sensors to see if no one's opened the front door for a week. Are they okay? Maybe it's an iPad on the wall that kind of alerts you to, your cooker's still on before you leave, because that might be the kind of extra bit of care that you need to continue living in the home that you've lived in, or it just makes your life that much more kind of easier to respond to those kind of challenges. So Tech, I think, will have interesting implications there for us. And again, it allows us to create community that's a wider range of types of people, which is always positive, I think. And again, not the benefit for us as a landlord is we can attract a wider audience, we get more people into our schemes.
Yeah. So we're touching on some of the kind of the tech in the home, automated home considerations, but just that question there, if generation rent are going to rent for life, who's going to cover the rent in retirement? I mean, later living has kind of overtaken build to rent as the next big thing, but that is a fundamental question. I know you guys are looking at it at LNG and you guys are considering, how would you address that question?
Yeah, absolutely. I mean, that's something that LNG has a business in later living inspired villages now. That's going to be, it's a key part of the rental market going forward, we think. And there needs to be, it's very similar to the story around build to rent that we were looking at a few years ago. It's a bit more of a cottage industry. There aren't really those high caliber kind of professional landlords that can do things that work through people's lives, that people's lives change. And that's, we sometimes it might be a distinct kind of care offering, or it might be that we can think about in the more mixed use generic schemes, this flexibility around the way people live and operate in them. But it's absolutely something we've got to wake up to as a country, because the demographic shift there is facing us, it's a huge wall that's facing us. So yeah, it's a really important point that we want to address as well.
I mean, I have heard someone say you think the housing benefit bill is a problem at the moment. Wait until the people that a generation rent retire and don't own their own home, that will, they will either fund to sell their pension, or they're still, there is a big problem there, but I don't think that that's something that it's too big to answer now.
Yeah. I mean, there was a question that flashed up, we get rid of the top one because we've done that one, James, but there was a question around the issue of build to rent has come up really because of a shortage of wider stock. And if we can magically build the 300,000 homes, then that won't be a problem. But really, I think in terms of the time that it takes to get development agreed, financed, planned and delivered, I mean, you see build to rent is always going to now form part of the wider housing offer in the UK. Do you think it's stabilised enough now as that?
Yeah, I would. We got 20,000 build to rent units have been delivered in the last 3 years. There's another 80,000 or so in the pipeline. I really think PRS is here to stay. PRS build to rent is here to stay. And it's going to just become a much wider part of the housing provision, and I think it's going to increase the standards and improve the quality that's available for people that they are in PRS in general, where everyone's going to have to offer more to the tenants, which ultimately is a good thing for everyone, I think.
And outside the UK, build to rent is much more widely accepted and more normal.
Yes.
We do have very much sort of a focus towards home ownership here, which is,
cultural obsession, isn't it?
and it's not replicated everywhere else.
No.
So we've got a lot to learn, like when you did your ULI tours to the States, in fact, of the models that are outside the UK.
So if we're looking at kind of tech solutions in the home, one of the dreaded words that everyone's looking at now, GDPR. The only people doing well out of that are the lawyers, as far as I can tell. But Alexa and those kind of things in the home, keyless entry, and all the data that you were touching on, Emma, that allows us to perhaps help and make our residents' lives easier, can also be very quickly into the kind of dark shadow of monitoring, control. So how do we handle that in this sector where there's so much potential with what could be done? Where are you trying to draw the line within your developments?
Yeah, I think, things like, you talked about, it's an example, we don't have it yet, but if it was a sensor to check on you, it has to be a choice of the resident first of all. They need to know what they're agreeing to, and there has to be a choice around it. And we have to be hugely sensitive to, the security of that information and how that gets used and shared. Yes, we're a financial services institution that's been around for hundreds of years, so we're working with people's money, we're working with life insurance, we're, deaths, very sensitive, emotional, and highly kind of confidential information all the time. So for us, it's a core part of our business is how we deal with people's personal information. But this sector will continue to present, things we need to think about to manage that risk. And again, it's just about placing the individual and their wants, their needs, and their security at the centre of things. And as long as we continue to do that, then hopefully we're in a good place. But we do, it's a huge amount that you need to be mindful of. No.
I would say it's minimum standards and collaboration within the industry. I think, coming from a bank, we really need to take this issue seriously. Big operators need to start working together to set those minimum standards and make them very, very clear to the consumer, whether it's consumer choice, what they share, but how do they share it. And so, because if you raise the trust, it's the trust to the industry, not just to the place where they live, that we need to work on. So collaboration is a big point.
I think for the sensors and we've looked at looking at insulation and effectiveness of buildings to do what they're supposed to do, particularly on older buildings. And what's really important and what GDPR does protect against is making sure that you only use that information for the purpose that you've disclosed to your tenants that you have to use it for. So and hopefully that the tech can help us make sure that we only use that information the right way, and we manage that information properly from security and also deleting it when we need to delete it.
Absolutely. And one quick final question. Given the importance of service and facilities, Owen asks here, how much asset value is tied up with the brand of the operator? Now, that's a really interesting question that's coming up. Again, there's no one model, I think, we'd all agree, but if you have any kind of final thoughts on that, Chiara?
Brand, for me, is the emotional connection that you create with the tenant once the tenant is in there. I don't think we're at the point where tenants will choose a building because of the brand of the operator. We might get there, but at the moment is when the tenant is in there and they call L&G, and L&G can sort out the problem there and then. That's when I say, actually, I really like L&G and I want to stay here. I don't want to go to rent from an individual landlord. I think that's the value of the brand and the ability to retain
and
the
tenant. Consistency of the service that you then get.
Absolutely.
I think for us, even though we're sub-market rental, and so there is, we've got a waiting list. We don't think that people should not get the same level of service just because they can't afford. So it's important, but it doesn't really affect our value of what we're doing.
It's more about credibility and trust.
It's more about reputation.
Yeah, I think that the value of brand is sort of, it's not really proven here yet, and it is a sector that's going to evolve, and you can look across to the States where people do choose to, when they move around cities, they might choose to go to a building operated by X because they trust that brand, and we've got a way to go to kind of prove what the value of that is here, but it is, it will, that fundamentally that experience is about keeping people in the buildings and maximising the income from that. So the service delivery we need to get right first time, so that the message will get out there that they've had a good experience.
The renting doesn't have to be a terrible experience.
No,
I think that's kind of the one message that if we were getting out there, that it genuinely is a way of living that it doesn't have to be terrible because you can't afford to buy. And actually that some people might choose to rent, but even if you're not choosing to because you have that kind of lifestyle choice, it's actually an experience that can be a quality one. And that's really important. I know we're being urged to finish so that we can try and catch on some time in the broader day. Ladies, we've covered a lot of ground very quickly, and I know for those of you who aren't embedded in the build-to-rent world as we are daily, there's a lot of rushing around, so I'm sure the ladies will be happy to answer some questions after the session. But I think that the key messages are around that shift just across the kind of wider CRE market from the occupier to the customer, and that is the shift that you're seeing in every single asset class. And I think understanding that making everything consumer-led, from the design of the building to the construction of the building to the operation of it, is really a huge shift for the industry, but one that has enormous potential. And in terms of tech adoption and the speed of adoption and the speed of absorption of these units into the wider housing market, I think is something that any of you should be keen to get part of. So please do come and talk to us. Please join me in thanking our wonderful panel, Emma, Olivia, and Chiara. Thank you.